Here's a coin. What if we flipped a coin and took a trade based on heads or tails? Random, 50-50 chance. Heads, we bet the stock goes up. Tails, we bet it goes down. Well, if you managed your money properly, you could still probably beat the stock market and make money. This is more about profit targets and stop losses than anything else. So I'm not suggesting that you flip a coin to trade the stock market, but you probably could. But what if instead of randomly flipping a coin, you used technical analysis? You kept track of whether the market in general is going up or down, whether the sector that your stock is in is going up or down, and what if you knew whether that stock had been going up or down, and you used all that information along with anything else to make a more intelligent decision than just flipping a coin. So what if you had a better than 50-50 chance at being right? Because after all, if you learn technical analysis or just common sense, or use indicators or a Discord like mine, then you're going to win more than 50% of the time, aren't you? And if you can win 60 or 70 or 80% of the time, we do a little bit better at copyandwin.com. But if you can win more often than lose, the only thing left is to make sure that when you win more money than you lose. So this is about stop losses and profit targets. So imagine if you wanted to never lose more than 1% of your trade and you put in a stop loss at 1%. That means if you're only averaging half your trades being right, you've got to make more than the 1% you lose when you lose, right? So in a perfect world, if you could take 1,000,000 trades, all you have to do is make 1.1% every time you win if you lose 1% when you lose. And if you can just flip a coin and be right half the time, you'll make money. But what if you can make 2% or 3% or more because you let your profits run with trailing stops? And that every time you won more than the 1% stop loss that you might be taking. So let's get in the mindset of researching profit targets versus stop losses. And what I really want you to do, the exercise here is consider that if you manage your money properly and you never take risks that are too big, well, you can win. You can actually beat the stock market on a regular basis. And it's okay if you don't. It's okay if you lose, so long as you protect your account using stop losses, and so long as you win a little bit more often than you lose. So if you're not a perfect trader and you're still struggling and you're still losing a lot, 20 or 30% of the time, you're wrong. It's okay to be wrong. Just make sure that you cut your losses and you don't chase. And make sure that your stop loss is smaller than your average profit. If you can do those things, and if you can teach yourself to make intelligent decisions that are better than, well, flipping a coin, you can change your life.